Okay, bro, welcome to another trading exercise. Today we are going to take a look at equilibrium. But before we do that, I want to also combine this trading exercise with yesterday's trading recap because yesterday I had one mini successful trade. So here you can see we have market open at half 4, which should happen right now here. Okay, so yesterday my bias was bearish anyway. Okay, but I saw that, for example, when we opened market directly here, we swept this little liquidity, okay, which was also 1 hour liquidity, and we created this bearish fair value gap right now here. But then the price immediately reversed and inverted that bearish fair value gap. So when this huge ass candle happened, I was thinking that this is manipulation, and I went long, and I put my stop loss for, I think, around 10 euros. Okay, so I was risking 40. 10 euros would be then 25%, and I had it somewhere around here like this, because my overall bias was bearish anyway. So I wanted to catch a little trade, but then I didn't trade for the rest of the day, even though there have been many good opportunities, because my rule is to do only one trade per day. Okay, so now that we discussed this, now we can go to trading exercise, where we are going to, as I said, going to analyze equilibrium on crude oil, just like we are doing now in these last few episodes. Okay, so let's go to 1 hour chart. Let's turn off all the indicators, and now let's also quickly describe what equilibrium is. Okay, for example, when equilibrium is basically when we have a, let's say we have a trend going up, okay, and then we have a liquidity sweep. So this right now here is a liquidity sweep, okay, and then we go down because of the sweep, and we break structure to the downside, okay, like here, for example. So what is equilibrium then? Equilibrium is simply then the middle point of this move down. Okay, so we have this move down after break of structure. So here we have like this, for example, and middle point of this would be right now here. Okay, so everything above the equilibrium is called premium zone, and everything below equilibrium is called discount zone. Okay, because we have to imagine this like from economical theory. Okay, when we have supply and demand. Okay, so we have demand here and we have supply here. Okay, so since here is the price, okay, so everything that is, you see, everything that is above the equilibrium is considered expensive, okay, and everything that is below equilibrium is considered cheap. Okay, so the same thing is with trading. So what will the price do? After we break structure, the price will go up, okay, into the equilibrium. For example, we go into the expensive zone. Okay, why? Because if we go to the expensive zone, the banks have better profits. Okay, because they can then start selling at this point, and then the price will collapse. Okay, so why is for banks better to sell here at point number 1 rather than at point number 2 here when we break structure? Why is that better? Because they have all of these as an additional profit. Okay, that's why. So now that you know what equilibrium is, let's go to the 1 hour chart as always. And for equilibrium we need to have 3 like steps. Okay, so step number 1 is that we have liquidity sweep. Step number 2 is that we have break of structure. And then step number 3 is when we actually draw our equilibrium. Okay, so let's go. Look, what do we have here? For example, here we have liquidity sweep, okay, and then where do we have break of structure? We have break of structure right now here. So liquidity sweep, here it's break of structure with this candle. So what do? I take from their most recent low, which is this point right now here, to the most recent high, which is this point right now here, okay? And I draw the equilibrium, okay? So this is how our equilibrium looks like. And more often than not, the price will go into the equilibrium and then continue higher, okay? So here we unfortunately don't get that, okay? So because yeah, then the price eventually went up, okay? But that's how it is. Sometimes you get it, sometimes you don't. You know, every strategy doesn't have a 100% win rate, okay? So what do we have here? Here we have again liquidity sweep. Where do we have break of structure with this huge ass candle? So what do then? I take the most recent low, which is this, to the most recent high, which is this. I take the equilibrium, okay, like this, and you see that everything below 0.5 is considered discounted, okay? So what does the bank do? The bank went down into discounted zone, and then the price completely exploded upwards, okay? Let's try to find another example. So basically, you know what equilibrium is, okay? So we take from the most recent low to the most recent high, and then we wait for 0.5 to be touched, okay? Let's take a look maybe here. What do we have here? So here we have a huge liquidity sweep. Then here we have a break of structure to the downside. So this right now here is the most recent high, and this right now here is the most recent low, okay? So let's see if we get anything from here. Like this, okay? The price doesn't touch equilibrium, so we ignore that, okay? Maybe if we take a look at here, for example, so here we swept all of this liquidity, and then the price reversed, okay? So where did it reverse? At this point right now here with this candle. So this is the most recent high, this right now here is the most recent low. So I take it from the most recent high to the most recent low, okay? I drag it, and then you see the price goes here into the equilibrium. You see here this little candle, this little wick, and then it continues lower, okay? Then it goes up again, it retests the premium zone, because premium zone is this, okay? It retests the premium zone and continues lower. Then let's try to find one bullish example. So for example, what do we have here? Here we have a liquidity sweep, okay? Then where is break of structure? Break of structure is with this huge ass candle. So what do we have here? Here we have a low. Here we have the most recent high after the break of structure, okay? So we take it, we drag equilibrium like this. So here I'm not sure if the price touched equilibrium, but even if it would touch it, you can see that the price goes up anyway, okay? What else do we have? For example, here we have, let's say, or here even better. So here we have a liquidity sweep, okay? Then where do we have break of structure? With this candle right now here. So what do? I draw the equilibrium from most recent high, which is this, to the most recent low, which is this. I draw it like that. You see the price comes into the premium, okay? Tuck, 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 and then continues lower at some point. It retests it here again and continues lower. What else do we have? Let's try to find one bullish example. Okay, here, for example, we have liquidity sweep. Now we are waiting for break of structure. Where do we have it? We have it here with this huge candle. Then we take the most recent low after the break of structure, which is this. I mean the most recent low when the break of structure happened, so it's this. The most recent high, it's this. You see this white candle, it came into the equilibrium, pink, and continued higher. Okay, so what else do we have? Okay, so maybe here with this candle we have huge liquidity sweep, let's say. Okay, yeah, whatever, we can have it like that. We have huge liquidity sweep. Where do we break structure? We break structure with this black candle. So this right now here is the most recent high, and this right now here is the most recent low. I drag it. Okay, we don't get anything out of this. Okay, the price doesn't touch equilibrium at all. Sometimes it touches, sometimes it doesn't. It's not a problem. Let's take a look here, the last example, or let's say the second last example. So we sweep, we have here, we have break of structure. So then this is the most recent low, this is the most recent high. I drag it. Look, the price comes into the discounted zone. Okay, so the banks bought it here at this in this rectangle for cheaper, and then the price exploded upwards. Okay, so what do we do then here? We sweep. Okay, we wait for break of structure, which happened right now here with this candle. We take the most recent high to the most recent low, which is right now here, and I drag it. And what does the price do? The price comes into the premium. Okay, so the banks could start selling positions here at the top instead of here at the bottom. Okay, and then the price collapses completely. Okay, so then let's continue. What do we have here? We have a sweep. Okay, I mean I'm sure here we also have some lows, and here we have fair value gaps. Okay, so let's say that we sweep. Okay, where do we have break of structure? We have it here with this white candle. Okay, so then we draw equilibrium from the most recent low to the most recent high after break of structure, and in this case the price doesn't touch 0.5, so we just continue lower. Okay, I mean, so it continues higher for a little bit and then continues lower. So yeah, that's basically it, bro. You wait for liquidity sweep, you wait for break of structure, and then once you have break of structure, you draw an equilibrium from the most recent low to the most recent high, or from the most recent high to the most recent low in terms of bearish market. Okay, and then you wait that the price touches 0.5, and when it touches 0.5 you go to lower time frame and you find an entry on the lower time frame. Okay, so that's about it, bro. Feel free also to join the Discord server for trading. I need to still put here for the daily bias for indexes and crypto, and then I'm gonna put also one trading breakdown today if I do a trade. And yeah, that's about it, bro. Feel free to join. We have trading and self-improvement. Do the hard work, bro, and see you on top of the world.